A couple I know listed their detached home in Scarborough 3 weeks ago. They priced it at 1.25 mil. That was already below what their neighbors sold for last spring. They got one offer. It came in at 1.14 mil. They turned it down. The house is still sitting. And here's what most people are missing about the freehold market right now. Prices are down. Sales are up. Inventory is at levels we have not seen in years. That combination tells a specific story. I'm going to walk you through exactly what it means for you today. I'm going to give you the exact price at the end of this video, but the prices means nothing without context. So let me build that context first. Here's what you need to know about April 2026 data. Sales volume for detached homes jumped. More people are buying than a year ago. At the same time, new listings are flooding in. Sellers are coming off the sidelines in record numbers. And homes are sitting longer than they were last spring. That combination, more buyers or even more sellers, creates a very specific dynamic. It means buyers have options. It means sellers have competition. It means the balance of power has shifted. If you're a buyer right now, this is the first time in years you've had real leverage. You have the luxury to compare. You can negotiate. You can even walk away. If you're a seller, you need to understand that the market you're listing into is not the market from last year or even from the year before. I'm going to show you exactly why, and then I'll give you the numbers that prove it. Now, let me show you why that decline is not a blip. This is a 10-year price trend for detached homes across the GTA. The peak was 2022. That was at 1.5 mil. That was the absolute top. Since then, there are 3 straight years of decline. 2023 came in at 1.46, then 1.45 in 2024. And in 2025, 1.37. That is about 166,000 off the peak, a 10% decline. And here's what's important. Look at 2017 to 2019 on this chart. Prices ran up to 1.1 mil, then corrected and flatlined at around 1 mil for 2 full years. Same shape we are seeing right now. The 2022 peak was sharper. The correction is steeper, but the pattern is identical. It was a run up, overshoot, correct, flatline. If the pattern holds, we could be in this flattening zone for another 12 to 18 months. That does not mean prices crash further. It means they sit. For buyers, that means you're not racing a rising market. For sellers, it means waiting for a bounce that might not happen until 2028. And here's where it gets interesting. Even though prices are down, sales activity is up. Detached homes saw about 2,800 sales in April. That's about a 9% jump from last year. People are buying, and they're just buying at lower prices. Semi-detached, there's 563 sales, basically flat. It's up about 0.4%. Townhouses, 566 sales, also flat. It's up about 0.6%. So detached is the story here. Buyers are coming off the sidelines for detached homes because the price correction has made them more accessible. A detached home at 1.37 mil is still a lot of money, but a year ago, that same house was about 1.43 mil. That $60,000 difference changes the math on your mortgage qualification. I'll tell you, if I were looking to move up right now, detached is where the opportunity is. The volume is there. The prices are softening, and sellers are definitely motivated. Semi and townhouse buyers, you have less urgency. Those markets are not moving as fast. Let me zoom out and show you the bigger picture. This is the 10-year price trend for semi-detached homes across the GTA. The peak was 2022 at about 1.18 mil. That was the top. Today we're down. That is down over $100,000 from the peak. So an over 11% drop over 3 years. And think about what this means for someone who bought a semi in 2022, paid about 1.18. Your home was worth maybe $1 million now on paper. If you put 20% down, that's about $236,000 in equity you started with. You have lost more than half of that on paper. Now, if you're watching this and you're starting to panic, no, that's not what you should be doing right now. If you're staying in the home for another 5 to 7 years, you'll likely recover. Real estate is long term. But if you're planning to sell this year and use the equity to move up, you need to recalculate. The equity you have is not what you thought it was. And this is the part that catches people off guard. They check what their neighbor listed for. They assume their home is worth the same. Then they get the appraisal back and it's about 80K lower than they expected. Now let's look at townhouses. Same story, steeper fall. Peak in 2022, about 1.1 mil. Today, under $1 million. That's over $100,000 decline. So about 12% off the peak. Townhouses are the worst performing freehold type over the last 3 years. And I'll tell you why. Townhouses sit in a squeeze. On the top end, they compete with semis. On the bottom end, they compete with condos. Both of those markets soften. Townhouse buyers have options in either direction. Some stretch up to a semi, others step down to a condo. And that demand pulls away from the townhouse market, which sits on both sides. So if you own a townhouse and you think about selling, this is the part you need to hear. Your competition is not just other townhouses. It is condos priced about a couple $100,000 less than you, and semis are priced about $100K more than you. And you need to price against both. I'm going to ask a favor. I'm just shy of 900 subs right now. I just need about 20 more. If you appreciate this video, I make videos just like this every week, about 3 or 4 of them. We analyze the market, look at trends, and give you tips and tricks that you don't see on some other channels. Subscribe so I can keep on making videos just like this. So this is the chart that tells you where the power sits. Supply and demand. So new listings for detached homes, about 8,000 in April. That's up about 18% from last year. Sellers are flooding the market. Active inventory for detached, about 11,000. At the current sales pace, that is about 4 months of inventory. Let me explain what that numbers mean. Under 3 months is a seller's market. Homes sell quickly and prices go up. Over 4 months is the buyer's market. Homes sit, prices soften. We're at 4 on the dot. That's firmly in buyer's territory for detached. Semi-detached inventory, 1,300 active listings, 2.3 months of supply. That's a seller's market. Semis are tighter. Townhouses, about 1,900 units, 3.4 months of inventory. Balanced to slightly buyer-leaning market. So what does this mean practically? If you're buying a detached home, take your time. There are about 11,000 options on the table right now. You can compare, you can negotiate, you can walk away from a deal that does not work. That is leverage you did not have 18 months ago. If you're buying a semi, move faster. With only 2.3 months of inventory, good semis are still getting multiple offers. You need to be ready with financing and a clear price ceiling. Townhouse buyers are somewhere in the middle. You have options, but the best ones are still moving. Let me pull all this into one table so you can see the full picture. Detached, 26 days on the market, selling at 97% of asking. The sales to new listing ratio, 34%. That's a buyer's market. That means that buyers are getting about 3% off the list price, and it takes about a month to sell. Let me walk through what 97% of asking means. If a detached home is listed at 1.4 mil, it is selling for about 1.358 million, about 3% off. 3 years ago, you're paying above list. Semi-detached, 20 days on the market, 102% of asking. The ratio is 46%. That is balanced to slightly favoring seller's market. 102% of asking means semis are getting bid up. Not by much, but if it's listed at $1 million, it's selling for $1,020,000. But that premium exists because inventory is tight, because they're at about 2 months of inventory. Townhouses, 23 days on the market, 100% of asking. Ratio is 35%. That means buyer's market. Townhouses is the most neutral property type right now, selling at list price, not getting bid up, not getting discounted. So if you're a townhouse seller, price it right and it will sell. Price it even like 3% too high and it will sit. Now let me take you inside of City of Toronto because the GTA averages hide huge differences depending on where you're looking. Let me start with detached. West End detached, 1.4 mil average, 255 sales. This is W01 through W05. Talk about Junction, High Park, Bloor West, Etobicoke, solid family neighborhoods. You're getting detached home for about 1.4 mil in a walkable neighborhood with good schools. Central Toronto detached, 2.4 mil, 248 sales. This is Rosedale, Forest Hill, Lawrence Park, the premium market. If you're buying here, you're in a different conversation entirely. East End detached, 1.18 mil, 267 sales. Talk about Leslieville, the Beaches, Danforth, Scarborough Bluffs. This is the best value for detached Toronto proper. You're about $230,000 below the West End and $128 million below Central. Now, semi-detached. West End semi, 1.1 mil, there's 75 sales. Central semi, 1.5 mil, 81 sales. East End semi, 1.2 mil, 81 sales. The East End is interesting on the semi side. At 1.2 mil, it's actually more expensive than the West End for semis. And that tells you demand is concentrated. Buyers who cannot afford detached in the East End at 1.18 mil are competing for semis at about 1.2 mil. The price gap between detached and semi in the East End is practically nothing. If you're a move-up buyer looking at the East End, this is the play. A detached home is only $22,000 more than a semi, but there's probably a lot of bungalows in the mix. That's probably why. That is less than 2% difference. Here's something most agents will not tell you. The West End semi at 1.1 mil is where I'm seeing the most negotiation room right now. Only 75 sales in April. That's low volume. Sellers in the West End are staying long because buyers at that price point are comparing semis to East End detached homes. If you're flexible on location, your leverage in the West End semi market is real. Central Toronto is usually in its own planet. Detached at 2.46 mil and semis at 1.54 mil. These numbers are so far above the GTA average that comparing them is meaningless. You're shopping with CO2, C3, C9. You already know you're paying a premium for walkability, schools, mostly schools, and proximity. The data here is useful for tracking trends, but not for a price comparison. Okay, here's what everyone's been waiting for, the overall average. Detached, 1.3 mil. That's down 4.1%. Semi-detached, just a little over $1 million. That's down 5.2%. Townhouses, 939,000, down almost 8%. The GTA composite freehold average is about 1.17 mil. Every freehold type is down. Townhouses are getting hit the hardest. And here's why. Townhouses compete directly with the condos on the lower end. And when condos drop, townhouse buyers have an alternative. Some of them decided the condo is good enough at $650,000 instead of stretching to $940,000 for a townhouse. That puts downward pressure on townhouse prices. For buyers, this is the clearest buying opportunity in years. You have more inventory, lower prices, and sellers who are willing to negotiate. Do not waste this by lowballing so aggressively that you insult the seller. Obviously, do your market analysis, but if you come in 3 to 5% below asking with strong terms and a quick close, that might be enough to win in this market. For sellers, price to the current market, not where you wish the market was. The data does not care about your renovation budget. If you price right, the home sells in 20 to 26 days. If you price wrong, you sit for 60 days and then do a price reduction that everyone on the internet can see.